Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 15th, 2019. Now, to get started this week, we're going to begin where we always do with that very important US dollar index. Now, as we can see, the dollar coming under pressure from the FOMC talking about rate cuts this month. Again, I think I've made my position very clear that the incoming data is not overly supportive of rate cuts, in my respectful opinion. So I'm not expecting a half a basis point cut this month, but it sounds like Powell is going to move forward with a rate cut, but I suspect it's going to be a one-off. So we'll see. But right now, the dollar is under pressure from this. Now, when we look at our main indicators from VantagePoint, when we look at our verified resistance zone up here, combining with the signal of the medium term crossing the long predicted difference, warned us basically 3 or 4 days before this big move down happened that something wasn't right here. The dollar coming under pressure. Now, we're sitting at about 39.1 on the predicted RSI, which is suggesting a potential breakout on the dollar. But again, in my respectful opinion, keeping it simple, we are still well within the overall range, but we're going down into this 95.20, 95.30 area, and the top side again coming in at or about the high, which is 97.20. We're unable to clear 97.20 and down we go. But again, the leading indicator here, the medium term crossing the long predicted difference, combining that with the neural index, basically gives us a very, very strong signal to sell US dollars. Now, my concern here is the dollar is closing below our TCross long, which is our critical pivot area of 96.49. but not decisively. And again, when we look at the CPI numbers coming out from last week, they were hotter. They're not cold numbers at all. They're not even warm. They're rather hot, to be honest. So I'm taking that with a bit of a grain of salt, but as I've discussed in many different presentations, the dollar is normally weak around the middle of the month. This is normal. It doesn't mean that the dollar is just going to sell off and it's going to go into a long bear market. I don't think we're there yet. Obviously, it could be coming in the near future, but for now, the dollar is following that monthly cycle where it's weak in the middle of the month, strong at the end of the month, and strong into the first week of the new month. Now, as we look at how that dollar move is affecting gold, we can see very clearly, based around the intermarket correlations, that we've had multiple retracements back to our T-cross long. One on July the 1st. We had several other ones after that. July the 9th. We had another retracement to the exact same area. That was on July the 5th. Now, when we look at this, that critical T-cross long, 1395, continues to hold. As long as we're above that, we're good. But when we look at the medium term, again, crossing the long-term predicted difference with the neural index, refusing to go below the long-term predicted difference, refusing to go below the zero line, this trade is now turning around yet again. I've been a strong advocate for buying gold since January 1. Gold's had its ups and downs, but ultimately it's pushing higher. Now, if we can break above these verified zones up in this 1430, 1435 area, then gold could see a much bigger move to the upside. And I believe that move is imminent at this particular time, but it's going to be affected by the Fed. Now, one of the more confusing things is why equity markets, more specifically the S&P 500 and the Dow, are going higher when the global indices are not. That is a huge red flag for me. In my respectful opinion, this is a Fed-induced rally, and the Fed can only push this thing so far. If the Fed is talking about cutting rates, then they must be suggesting, I would assume, a recession is coming, and we know that stocks don't do well in a recession. So for now, the equities are moving higher, but my optimism on any continued strength on this in the longer term or even the medium term remains heavily guarded. So for next week, 2964, our T-cross long, we're closing the week out here at 3015. Big move up, but again, 100% Fed induced. This is not based on real world demand, because if it was, then the global indices would be going higher. We know that the markets are now it's confirmed, guys. The markets are globally connected. So again, if this is a factual move, then we would be looking for the Nikkei, the DAX, maybe the Brazilian index. All of these things should be going higher, and they're actually not. So once again, my optimism on any further upside on the S&P 500 is likely to be incredibly limited. Now, when we look at oil for next week, again, oil is moving up with the stock market, but we're encountering this significant resistance around 60.38, which is clearly identified by the verified zones here. So we're probably going to see a little bit of a move higher, maybe towards 64.21. But again, I think that oil is on borrowed time. Oil, the seasonality here, we could hit as high as $67 a barrel again, but that's because we're in summer driving season here, guys. There's real world demand for oil, and even if there isn't demand, they always seem to ding us at the pumps, don't they, when in July and August. So probably look for a little more upside on oil. We can see our medium term crossing the long to the upside with our neural index, but the RSI is losing some momentum already, which does go to my point about the S&P 500. Now, as we come into our main Forex pair, obviously the euro has clearly enjoyed the dollar weakness. But again, the question is, how far can that weakness go? And again, the Eurozone is not looking any better than the US. In my respectful opinion, it's worse. So while the euro has recovered off of these verified zones, that's fantastic here. But the one thing we've got to watch for, again, is can it move higher? Now, when we look at this critical pivot area here, 112.69, the euro, it's absolutely struggling in this area. Now, if the dollar index can extend lower, then that will push the euro higher. Gold has a very high correlation to gold contracts also. We're going to be watching this and waiting, but we've had a firm buy signal in here when the medium term crossing the long term predicted difference combined with the neural index that led to a very nice move, but we've got to clear. Basically, I would like to see us break free and clear of the 113 area, and then we can look to extend longs. But right now, again, that TCross long, you can see we're closing right on that number. So once we break through, we should see the euro extend, but it's not a done deal here, guys. There's no free lunch here, guys. The euro could very much also succumb to the economic data. Now, with US Swiss franc this week, once again here, guys, a number of analysts and pundits are very perplexed why the dollar yen did not move higher, why US Swiss franc did not move higher based on what the Fed is talking about, but that's a leading indicator. We know that if gold extends higher, then pairs like US Swiss franc and US Japan will absolutely move lower. This is what most analysts miss, is that direct intermarket correlation. So this big sell-off right off our T-cross long at 98.93 was a very, very good trade. So I would say that it's very likely that we're going to target the lower end of this range around 97.37. We've got our medium term crossing our long predicted difference. Again, guys, with the neural index, a leading indicator that this was going to go lower, but we're not quite on the breakout point with the RSI. The predicted RSI sitting at 41.5. We're looking for a break of the 40 level on the RSI to really get this thing moving. Now, as we look at the pound dollar going into next week, we're recovering off this other end. I've been a strong advocate for longs on this particular pair, but we've got to break through this 125.89 area. You can see on Thursday and on Friday, we're closing right up against that level. Medium term, again, crossing the long-term predicted difference. You should always have your chart set up like this, guys, because again, this will tell us not only trending moves, but counter trend. Contrarian positions are usually very, very good. Now, our RSI, a little bit steep on the angle here, but 60.9, it's looking like it's going to go here. But we need that dollar index moving lower, guys. That's what we really, really need here. So right now, we clear 125.89, close above it for 1 or 2 days in a row, and we should be good to go for longs here. Now, with the dollar yen for next week, as I was saying a moment ago, with the dollar yen, a number of analysts very perplexed by this move where, I have not flip-flopped on this with my own clients. It's a sell the rally. I believe that the equity market rally is fake, and ultimately the brokers, the banks, the trading firms, they're pushing the market higher and getting ready for an epic crash. So if I'm looking at gold, if I'm looking at dollar yen, if I'm looking at US Swiss franc, it doesn't support the longs on the equity markets. That's my rationale over the years, good, bad, right, wrong, whatever way you want to look at it. I know what I know. So when I look at this right now, the dollar yen, the key level is 108.22. If the equity markets continue to break higher for multiple days in a row, we could see this thing turn around. However, a break of this area down here, this low area coming in down around 107.53, and this further verified zone down at 106.78, if we lose these two levels, then that is just a matter of time before the S&P 500 crashes. I believe that these are leading indicators that are telling us just that. So when I look at this right now, dollar yen is gaining momentum, but this can be a very frustrating pair to trade. I don't dispute that. So we'll keep an eye on these verified zones, but right now the indicators in the software are saying that we are going lower, and selling rallies is the better play. So right now we'll watch these levels around 108.20. If we hold that level, and more importantly, if we hold below this verified zone high at 108.99, basically shorting up into this level is a very, very decent play. Now, with our three main commodity currencies, USCAD, Aussie US, New Zealand US, all very similar trades. Now, again, a lot of the pundits are getting very excited about a breakout on the USCAD pair. I can't say for sure that I'm in that camp at this particular time. I think that I've seen over the years multiple bear traps setting up down in these particular areas, and as you can see, we've got support all the way down into the 129.50. But right now, if we're talking about interest rates, guys, and the fact that the US is talking about cutting, the Bank of Canada is also on hold. And in most cases, if the US dollar is a little soft, usually the Canadian dollar is also. And the reason I say that is because the two economies are so connected. The number one trading partner. Even though Canada tries to get something go with China, it's pretty much failed miserably with the Huawei thing. Canada's holding the CEO, they want her back, yada yada yada. So we look at all of these things, and right now Bank of Canada is on hold, FOMC is on hold or maybe cutting. Then if the FOMC does end up cutting, in my respectful opinion, the Bank of Canada is likely to follow not too long after. So not exactly, it could be a good short here, guys, but if I'm shorting this thing, I want this up higher, up towards this 138.88 area. I think it's potentially a very dangerous short down here. And the reason I'm saying that is because of these verified zones. And when you have these verified zones, the brokers usually set up bull and bear traps around them. So don't get caught on that trap. We want to see this thing push lower, maybe come back up and retrace, and always use your long predicted too. That key pivot area now, 130.78. So all of our resistance, guys, is much higher than where the market is right now. So be very, very cautious, on shorting this thing down around 129, or excuse me, down around this 130.40, 130.30 area. Be very, very careful. Now, Aussie US and New Zealand US, they usually respond very well to gold moving higher. So when I'm looking at this right now, as gold moves back up, you can see that the Aussie is following. We've got a fresh buy signal here on the medium term crossing the long predicted difference. The RSI is perfectly positioned for an advancement, but be careful. Again, up around this 70-30, 70-50 area. Very dangerous up here with these verified zones. So we'll continue to monitor this. But right now, we want to see if we can get above, I think it's imminent that we're going to 70.68. The question is, can we break through this? Now, if we do, we've got a real shot of getting back up towards this targeted area, up at the top of the verified zone here. And the top of that particular verified zone, sorry, sorry here, guys. I'm just struggling with this a little bit. If I back this out a bit, maybe that'll help me a little bit. Okay, so this is the big level back up here, right up around this, approximately the 7205 area. Right now, it looks like we are going to be heading to that area. So we'll watch right now. The immediate level that we have to break through, though, to get there is we must get through 70.68 if we have any shot of going back to 72. The indicators right now in VantagePoint are saying we are going higher. Now, the signal on New Zealand is going to be very, very similar here, guys. When we look at the charts, we've got the same setup here, the medium term crossing the long predicted difference. Our downside pivot area, we're looking to hold above 66.41. With the Aussie, we're looking again, if we bring up our key pivot areas, TCross long, 69.73. That's our buy zone, guys. So as long as we're holding above that area, both Aussie US and New Zealand US are likely to move higher. But you can see that the position of the RSI, the position of a number of these indicators are very, very similar. But when that medium term crosses the long-term predicted difference, in combination with the neural index and the RSI at a reasonably level like 60, 65, the probability that we go higher next week is very, very strong. So with that said, this is the Forex Weekly Outlook for the week of July the 15th, 2019.